Good evening, everyone. Thank you again for joining us this evening. I am Widya, the Head of International Residential in JLL Singapore. Just looking at the participants and the registrants today, I'm so happy to see many of you logging in today again. Some of you have been viewing our webinars since the very first one that we started in April. So thank you again for your support. This time around, we are here to present to you JLL's latest research called the Corridor of Opportunity, and we will be spotting on Reading, which is the gateway of a development that city that we are looking at now. So today, alongside me, I have Mr. Nick Wheaton, someone you already recognize, who has been leading of all of our UK living research in UK. He will be covering UK market analysis and also the Western Corridor research, which will be made available for you shortly. We thought that since many of you have been asking us about spotlight developments, it's very apt that we are tying it together with, like I've mentioned, Spotlight on Reading, focusing on a new development by Huntley Wharf, which will be presented by Mr. Rob Willis, business development manager at Berkeley Group Singapore. At the end of the session, as always, we will have the Q&A session, and this time around it will be moderated by my colleague and good friend Christine Wong, who is the head of international residential in Malaysia. So before I hand on the presentation to all of the speakers, I thought we could make it a little bit more exciting by running quick poll. So if you could kindly participate, we are so keen to look at the responses from all of the viewers. And at the end of the session, we will be sharing the results. I'll keep it another minute also for you to respond. And in the meantime, let me just also do some housekeeping. Don't forget to type in all of your questions in the Q&A box at the bottom of your screen. My colleague, Christine, will be facilitating it at the end of the presentation. So, right, I'm looking at all the responses. Very interesting. So now let me hand over to Nick, who will be starting his presentation now. Nick, over to you.
Thank you, Widya. Hello, everyone. It's a great pleasure for me to be able to speak with you all again today. So I'm going to give a brief UK market overview, and then I'm going to talk specifically about one of the great opportunity areas in the UK at the end of my presentation. So as some of you will have heard me speak before, I'm trying to make sense of what's occurring in this unprecedented time is a real challenge. But one of the crucial starting points is to look at the economic impact. And we know that the UK government has made great attempts to try and avoid insolvencies, avoid redundancies, to avoid evictions, and ultimately to avoid a fully baked financial crisis. There have been significant job protection schemes created and employment schemes to prevent businesses from failing. But if we try and make sense of what kind of recovery we expect to see, the early hope was that we would have a V-shaped recovery. A steep decline, as we know, occurred because of the full lockdown measures that were put in place to contain COVID-19. But then also there was hope of a steep incline thereafter. Now, the little infographic on the bottom right-hand side of the slide you're looking at there helps us to try and make sense of what kind of recovery we are now facing. So on the left-hand side there, we've got the containment duration highlighted: 1 quarter, 2 quarters, 3 quarters plus, short, medium, long. And then along the bottom, we've got how effective has the policy measures been? Have they been ineffective, partially effective, or fully effective? Now, we know even the most optimistic of us could argue that they've only really been partially effective in the UK, because the UK has been one of the worst affected countries in terms of its fatality rate in the world. So that probably puts us, when we consider that we're now into what is looking like a medium-term containment period. We've gone through the short-term period. We're now into the medium term. There are certain relaxations starting to occur, but certainly we're moving into that second quarter, and we do expect some form of containment on our normal life to potentially occur into the third quarter. So that's meaning that we're looking at something like a U-shaped or even a UL-shaped recovery period. Now, if we move to the next slide, we can start to consider some of the other signs of effects, some of the signs of whether there are any signs of economic scarring starting to occur. Now, we know that the UK has 7.5 million people now on furlough. Furlough is the government job protection scheme that they introduced at the start of COVID-19. Now, 7.5 million people represents about 25% of all full-time UK workers who are effectively on this scheme. And if you add that to the pre-existing public sector workforce in the UK, it means that about 50% of all full-time UK workers now currently are being state subsidised. This is great protection for the country, but there are a few worrying signs alongside that. We've got an increase in universal credit claims, or job seekers allowance as it's called, up to around about 220,000 per week now. Up from 50,000 per week pre-COVID-19. And the Office for Budget Responsibility now forecasts that the UK will see a 2 million person rise in real unemployment in Q2 2020. So there is going to be some real job losses. Now, this is likely to disproportionately impact lower income earners. And these are people, as some research has shown, about 60% of these lower income earners below £20,000 per annum are actually unable to work from home. They're disproportionately in certain sectors, hospitality type sectors, retail type sectors, but they can't crucially do their job in a home working environment. Now, if we move to the next slide and we consider what some of these impacts, what they might mean in terms of buyer sentiment, domestic buyer sentiment. A major survey was undertaken by Ipsos Mori, covering quite a lot of countries, as this slide shows. And what we found in terms of the UK results was that there's a majority of UK citizens who are not comfortable with returning to full normal life until they're certain that there is an all clear, that there's a COVID-19 all clear in place. So what this might mean is that there is a bit of a restrictive effect on domestic buyer sentiment for the short term, at least. Now, that said, the UK housing market did reopen for business this week. So this is good news. We are back in business as a housing sector. And there are reports of pent-up demand and some immediate returns to activity. So we're watching that closely to see whether there is a quicker bounce in buyer sentiment. But certainly there will be restrictions on our ability to go about normal life as it once was known. So there are those two considerations to think about. Now, if we turn to the next slide, history is always obviously useful in trying to make sense of a crisis when you are in the midst of it. And this chart shows you the relationship between house price change and annual housing transactions over the past 30 years. Now, this is a slide I've used quite a lot in recent times. It's a very useful one for making sense of what's going on. First of all, it shows you 6 major crises that occurred over the past 30 years. And then the black line shows you the relationship in terms of housing transactions. And you can see across all those crises, there was a dip in transaction volumes to a greater or lesser extent, depending on the crises, as effectively sentiment was affected by what was going on in the crises. Now, not always was there a material fall in house prices, though, as a result. The red line showing house price growth, or notably in 2 periods, negative value growth or house price falls, that being the early 1990s UK recession towards the left-hand side of the chart and the global financial crisis in the middle of the chart. And in both of those instances, there was significant household distress, business distress that led to an increase in forced sellers in the market. People lost their jobs and found themselves in a position where they may have had to sell their home in a forced basis. Now, that hasn't been the case this time around due to the job protection schemes. And so far, there's very little evidence of any house price falls in the UK, although it should be admitted or acknowledged that a lot of the indicators lag the market and are only just starting to become apparent in terms of behaviour. Now, the consensus opinion of forecasters out there is that there will be some value fall now in terms of UK house prices in 2020, and they range from around about a 5% fall to a 13% fall at the more extreme end. Now, JLL's position, we have just been finalising our position, is somewhere in the middle of that. We expect an 8% fall in house prices in 2020, but I should stress that it will be a moment in time, a blip, if you will. It will be short-lived, and we do expect areas to start to grow again quite quickly. Now, some areas will grow more quickly than others. Some will be more resilient, may not see that level of fall. And we're going to focus on an area a bit later on in this presentation that certainly will be less affected by that expectation for house price change. Now, if we move to the next slide and consider the effect on house building, this is a really important part of the story as well. So we know that over the past 30 years, again, through those major crises, that house building was affected sometimes not even affected by the major crises that occurred. But notably in the UK recession and the global financial crisis, again, there was a significant drop in house building activity. And this chart looks at new housing starts, new development. And what we saw in the global financial crisis in particular was that housing starts dropped to around about 100,000 for that year. Now, what's going to happen this time around? Well, in the global financial crisis, there was a significant loss of capacity to build, particularly in the small to medium-sized developer scale. Many businesses went out of existence and never started up again. This time around, we don't expect that to happen, and many of the house builders are in a much better position to weather the storm, so to speak, and some have managed to continue some form of activity through the COVID lockdown, but albeit at a very reduced level. And we do expect their ability to develop to be reduced for some time, as they have to go back to work with social distancing measures and the like in tow, which means that they can't build as quickly as before. Now, what do we expect new starts will look like for 2020? We do think they'll drop down to that global financial crisis type of level of around about 100,000, largely because of the lost period of development capability that's already now occurred, but also the slower ability to ramp up going back into as we return to normal life. So there's an important point around dropping to that kind of level, and we expect constraint on new delivery for the next 18 months, 24 months as well. It means that it will exacerbate the fundamental undersupply of housing that we already have in the UK. We need to build 300,000 homes per annum to meet our population changes, our growing population. So this is going to make it even more difficult to find a new housing opportunity. So if one does come around, we would stress that it's going to be a good opportunity in itself, as it will be in relatively finite supply. Okay, now if we turn to the next slide and start to consider some of the positive reasons to invest in UK housing. First of all, we know that the exchange rate, that sterling is fundamentally undervalued relative to the US dollar. So if we go back to Brexit, 23rd of June 2016, sterling was trading at $1.48. But Brexit, the surprise result as it was, caused sterling to depreciate quite quickly, and it effectively moved around the $1.20 to $1.30 mark pretty much ever since. Now, there were signs that sterling was starting to appreciate at the turn of the year, given that Brexit was resolved and the future for the UK was already starting to look brighter in terms of a clearer, certain path. But COVID-19 has provided some form of setback to that movement at that point, and sterling is currently now at $1.23. But the expectations, the consensus view of many forecasters is that sterling is undervalued, and we expect it to appreciate to something like $1.40 within the next 2 years or so. So we're talking about a 15% currency arbitrage over that opportunity, not at all insignificant in terms of considering when is a good time to buy. Now, if we move to the next slide, we can also consider one of the most fundamentally important reasons to invest in UK living assets, in UK housing. And that is the key word there, is resilience. It's a long-term fundamental opportunity. Now, this chart here, this slide here, is talking about a really important piece of research we did at the turn of the year, where we did a survey with 70 of the world's largest investors, sovereign wealth funds, the likes of big major pension funds. These investors, if we follow their money, we usually have a pretty good idea of long-term significant trends that are a good indicator to keep account of when we're trying to decide how to invest. And all of them, all but 9% of these investors said they were going to maintain or increase their allocations towards UK living assets. And there are some good reasons why. Fundamentally, they see UK living as a long-term, stable, steady income stream, counter-cyclical, if you will, and always performs well coming out of a downturn. They fundamentally appreciate the supply-demand dynamics that exist for UK living. We don't build enough housing, and they can see that we have structural population changes occurring, an aging population, a growing population, and they can see that there's good reasons to invest in living assets. And I think as a final point, if you will, I often say that how we work might change. In fact, we're already seeing that how we work might well change coming out of COVID-19. How we play might change, the kind of leisure pursuits we seek, how we shop might change. What we know that will be certain is that we will always need a place to live. Housing will be the one constant throughout that, and that is something we should always consider when trying to decide what to invest in. Now, if we turn to the next slide and looking at the significant opportunity that I want to talk about today, I want to talk about the Western Corridor. Now, this is an area of the UK stretching out from London, going west, and it's a really significant area because of many factors, because of the employment base that it attracts, and in turn, that has had a really significant impact on the type of people that live there. Geographically, it's really advantaged, it's really significant. It's close to Heathrow, the international hub, if you will, or port for the UK. And then it provides great access to all of the rest of the UK through road and rail networks. Now, there are three main employment areas, three main urban areas in the Western Corridor: Reading, Maidenhead and Slough. And this chart shows you a few high-level statistics about those areas to really underline the kind of person that these towns are attracting. And what you see there is really high proportions of young, affluent, professional people living in these areas. Around about a third of these people are high income earners, and much higher than the national average. And there's also a really high percentage of privately rented households in these areas. Between a third and close to a half of all households in these key urban areas are rented households. And that's a really positive indicator if we're thinking about investing in a rental home within these towns. So if we move to the next slide and consider some of the key drivers for why the Western Corridor is such an important opportunity. Well, first of all, we know that there are relatively attractive house prices and rents within these urban areas, especially compared with London. But there's also really good connections into London. The urban areas we've highlighted are between 15 and 25 minutes on the train into London Paddington. But those connections are only going to get better because of Crossrail, which will be fully operational by 2022 and will improve the connections from these urban areas to a whole host of a greater array of major London employment hubs. The West End, Canary Wharf, the City, all of them will become quicker and in better access for these areas. But perhaps the most significant driver is the tech driver, the nature of the employment profile in this Western Corridor area. And if we move to the next slide, I want to talk a bit more about that tech profile. So, as we've said at the outset of this whole webinar, sometimes this area of the country is nicknamed the UK's Silicon Valley, and there's an obvious, clear reason why that is the case. There is a great array of significant employment opportunities there, blue chip companies, tech companies that are going to shape the future of 21st century working and living. And this is just a selection of these companies that can be found in the Western Corridor, many of them centered around Reading, which we'll talk about more shortly. These companies we're already going to set the tone for an ever closer relationship between living and working in the 21st century. And arguably, quite significantly, what's occurring through COVID-19 is an acceleration of that that process. These companies will thrive and are thriving through what is occurring in terms of the changing nature of how we're going to live and work going forward. And all of these businesses there are going to grow, and they continue to attract that affluent young professional employment type of occupier that we talked about before. So if we turn to my final slide, before I hand over to Rob Willis to talk about a more specific opportunity within Reading. I want to talk a little bit about Reading. Reading is, if you want, the beating heart of this Western Corridor, Silicon Valley opportunity we've talked about. This is the high-tech capital of the Southeast and one of the most important tech locations within the UK as a whole. And Reading is already a significant location in itself. It's a sizable town with lots of opportunities to live and work there anyway, but it's growing really quickly, and there's much regeneration effect taking place within the town centre, new employment opportunities, new commercial centres, and crucially, some really attractive new residential opportunities. Now, we expect Reading to only get stronger with this tech revolution that's starting to occur, but also a note about the housing market there. So COVID-19, as I've highlighted at the start of my presentation, will have a short-term effect on values, on house prices and rents, but it will be short-lived, and there will be areas that perform better through it and are somewhat protected from those falls. And Reading, we would stress, will be one of those areas. We expect it to see it outpace and outperform the UK trend, the Southeast trend as well over the next 5 years, and it will bounce back quickly once this downturn starts to abate. So I'm going to hand over to Rob now, and I'll take some Q&A towards the end of this session. Thank you very much.
Great, thanks, Nick. Good afternoon, ladies and gentlemen. My name's Rob. I'm here from the Berkeley Group Singapore office, and I'm just going to give you a brief overview of a brand new development and opportunity that we have located in the centre of Reading. Ultimately, us as a business, we've been building in Reading for about 15 years with two, very successful developments at Kennet Island and Green Park Village. However, there's always been demand for a development in central Reading itself. So when the opportunity at Huntley Wharf came available, it was certainly something that we saw as a great opportunity, and we did purchase the land itself. So as I said, it is very much in the heart of central Reading itself. You can see from this slide here where the Huntley Wharf development is going to be located. It's marked there around the yellow outline, and ultimately it is perfectly located for both the Oracle Shopping Centre and the Reading Main Line station. So it's only about a 9 minutes walk to Reading Station. And from here, you can get directly into central London, Paddington in 26 minutes. Of course, we've got the Crossrail opening up next year as well, which will give you direct access into London, which is fantastic, into places like Canary Wharf. But it will also go straight through that Western Corridor we're talking about, really opening up the opportunities for Reading. On top of that, we have the Oracle Shopping Centre, the sort of beating heart of Reading. And that's about a 10-minute stroll, 11-minute stroll along the river. And in there's a whole array of different retail and commercial offerings, whether or not it's restaurants, shopping, and things like that. So it really is in a fantastic location in central Reading itself. So a little bit about the development. Ultimately, it's a 6.9 acre site which we are building on, and we'll have 3 main phases over 3 buildings, 2 of which we will have available today. Once completed, there'll be 765 apartments, which are going to have fantastic opportunities looking into landscape garden areas and also over the river as well. So really some great, fantastic aspects that people will be looking for. As I've already mentioned, it's merely a 10-minute walk to Reading Crossrail Station, and it offers that riverside location. Like all Berkeley developments, it will be a fantastic level of amenities and quality of specification. We'll have a residents-only gym, as well as a convenience store and 12-hour concierge on the development. This ultimately means you don't need to leave the development for your day-to-day needs, which is certainly what we're seeing a trend towards in this day and age. And finally, it's really trying to utilize some of the fantastic architecture of Reading and sort of bringing in some of the old with the new. So in terms of sort of Reading's location, as Nick's already mentioned, it has fantastic accessibility into London, which is great, but it also has great accessibility to the rest of the UK, which is why we see so many businesses call Reading its home. Not only can it go to places like Birmingham and Manchester and Leeds, some core cities in the north of the UK, but it also has great access to the west as well, to places like Bristol and Exeter, and then of course Reading Reading itself and all the businesses that are around there. Education is always a key reason why people invest. We see it hugely in London, and the UK is lucky enough to have some of the best education facilities in the world, and Reading University is certainly one of those opportunities. There are currently 19,000 students studying at Reading University from over 150 countries. On top of that, recently, Reading opened its University of Reading Malaysia campus as well, located not too far away from here in Singapore. And it also has the world-renowned Henley Business School, which really ultimately is another major reason why people call Reading as their their European headquarters, because so many well-educated people are coming out of the university and looking for jobs and opportunities in the direct local area. So we've spoken a lot about the businesses in the area, and this map here really does kind of show to you exactly where they're located from Huntley Wharf. Of course, you've got the Green Park Business Park, which is actually owned by Mapletree, a Singapore company, and that has some global brands such as Huawei, Virgin Active, PepsiCo, Cisco, all located there. But on top of that, we've got three major banks in BDO, HSBC, and Barclays. We've got Deloitte, PwC, KPMG, people like Prudential, Nokia, Vodafone. So yes, there is a huge tech influence in Reading, but there's also all other industries covered and real global players there. And this is why we see Reading have such strong demand, and why it's an area that we've really singled out as a place for great investment. Ultimately, Reading has the highest density of tech businesses in the UK. It has recently been voted as one of the top 25 most attractive European cities for foreign direct investment. Of course, it already has the major commercial and retail opportunities in Reading itself. And as Nick alluded to earlier, it's actually forecast to be the UK's fastest growing economy, which of course, is something very positive for the area and Reading itself. So in terms of Reading, in terms of the businesses that we've already got there, what that means is it's got one of the highest employment rates in the UK currently, which is again fantastic in terms of when you're looking for tenants or potential resales when you purchase a property. Not only that, Reading has one of the highest wages in the UK outside of London, and property prices are nowhere near that sort of level of central London, which means that the affordability and the want for high quality homes is extremely high, which is why we see such demand for Huntley Wharf already. On top of that, there are some major infrastructure projects going on in and around this area and Reading itself. You've got the Heathrow expansion, which is £30 billion worth of economic benefits coming into the local area, generating 33,000 jobs in the process, which is, again, a huge investment drive for the local area. Not only that, we've recently had the £35 million Thames Valley Science Park that's opened up, which is going to provide over 70,000 square foot of office space. And it's recently been announced that Blackhall Studios, a Hollywood studio company, is investing £150 million in the Thames Valley Science Park to build their brand new studio. And they've ultimately brought to films such as Jumanji and Godzilla, which are global box office successes. And this is going to generate over 3,000 new jobs in the area as well. Of course, the Reading and the Crossrail investment is huge. £900 million has been invested into Reading Station, and once Crossrail is open next year, there's going to be 200 trains into central London every day. And this sort of infrastructure and investment in the area is fantastic, and it's going to continue to grow the opportunities in Reading itself. So a little bit about the development itself. As I said, it's ultimately split over 3 blocks, which we released sort of slowly to the market a few months ago, about 5 or 6 months ago. And where we currently have availability is in Baker's Yard and Discovery House. We ultimately released about 70 apartments to the market, of which over 60 have already sold, and hence we have bought a couple more available to the market today ahead of our launch, which is actually scheduled for November this year. As I mentioned, the facilities on site are going to be what you'd expect for a central London location, with a gym and 24-hour concierge, and there's also going to be a creche and an area of, and also the convenience store that I spoke about, as well as a co-working space area. So it's very much sort of looking and future-proofing for the future. Of course, the specification is going to be to the highest standard as well. which I'll get onto in a couple of slides time. And on top of that, you can see here from this site plan how it's located right next door to the river, and also about 50% of our site is going to have landscape gardens. So there are opportunities for all apartments to have fantastic views, either looking into those landscape gardens or looking out into the piazza or onto the river. Here's just a little bit of the architecture, as you can see here. So the site before used to be a factory for Huntley's biscuits. So in terms of the architecture, we've really tried to sort of incorporate the new and the old to sort of keep the heritage of the site, but also look forward to the increase in tech that we've seen in the area. As you can see from the CGIs there, it will look fantastic on the river once completed. And here again, you'll see how it looks in the evening, which I think you'll agree looks fantastic. Again, in terms of the interior specification, they're essentially what we call turnkey properties. So all of the major fixtures and fittings are going to be in once you move or once the property is completed. All of the major kitchenware and bathroom utilities will be included in the apartments. And we're actually offering a furniture package with any purchase that is made over the next sort of day or so, which will essentially mean that once completion happens in 2022, they'll be ready for immediate let, which is fantastic. Again, at Berkeley, we try and make sure that there's an element of customization to your home. So we have 4 different color palettes, which we can ultimately go through with you at a later date. And on that note, if you are interested, please do get in contact with Widia or Christine, and we can arrange either a virtual viewing and have a more specific talk about opportunities within the Huntley Wharf development, or you're more than welcome to come down to our office here in Singapore. And having said that, in the UK, our marketing suite is now open there as well. In terms of a couple of the facts and the figures that you may be interested in, we have 1 bed starting from £307,500 and 2 beds starting from £385,000. And we also have some fantastic 3 beds that have just been released for this phase and essentially released today, which start at £545,000. And they're essentially set over 3 floors, which give you and overlooks the river. So it essentially gives you kind of house living, but with the benefits of the condominium, which is quite exciting. So if you would like to hear some more, please do get in contact with your JLL representatives, and we'd be happy to show you more. I think we'll move towards some questions now. Thank you.
Thank you, Rob, and thank you, Nick. We have ended our presentations for today. We have now opened the floor for Q&A. We have seen couples of questions are coming in now. And I think, Nick, this is for you. Has the finalized Brexit deal affected the development plans for those businesses to continue to stay in UK or Reading?
Yeah, thanks, Christine. It's a good question. So I think the Brexit deal, in terms of planning for these kind of companies, is probably not been the most important consideration on their minds. So it hasn't been unfavourable. So that's a good starting point. But what's more important for them is the fact that they are in a location where there's a hubbing mentality that can occur. So all of these big tech blue chips want to be near other big tech blue chips because it creates kind of like a business ecosystem where they can grow together and they thrive from each other's offering that they have. They need each other to develop. So that is a more significant point in terms of their development plans. And the fact that they are already there means that they're likely to continue to stay because they can see the benefits of staying in Reading, the attractive pricing in terms of residential pricing, which means that young, affluent, talented professionals can choose that location to live and work there. So that's the more important driver, the existence and the unlikely growth of that tech hub as it was anyway.
Thank you, Nick. So there's another question. Are there likely to be any hotspots for price growth once the recovery begins?
Well, yes, absolutely. And as I stressed actually in the presentation anyway, Reading would be one of those hotspots. London, we also expect to bounce back more quickly coming out of the downturn, so to speak, or the blip, more to the point that this is. Reading as well, given all of the reasons we've talked about, the strong tech base, effectively the employment base that's very future looking, that represents the 21st century offering that it does. Many of the UK's big towns and cities we would actually also expect to perform slightly better given the demand supply dynamic. Certainly there will be more resilient locations, certainly there will be some that perform better than that overall UK house price position I outlined during my presentation.
Okay. And do you foresee work from home to increase substantially and in fact pushes demand for residential property up in 2020 and 2021? And by how much over 2 years if yes?
So this is one of the most interesting questions for a researcher like myself, and one of the things that we're trying to do a lot of work on, because these are the things that can be real key moves in the way we behave. We've just undertaken a really detailed survey, and we're actually in the process of analysing the results. So I wouldn't want to give too much away at this stage, but the survey was all about what people want from their homes going forward. Now, it's important to remember when you're in the middle of a crisis and you're locked in your home, you're probably only naturally going to look around and think about all the things you might want to change about that home, but equally you might be looking at the things and thinking about all the things you love about the home you're already in. What is certain is we will spend more time in our homes in a post-COVID environment than we did in a pre-COVID environment. And that's probably from the point around this question around working from home. Now, one of the headline findings I guess I'm happy to share from the early analysis of the research is the sample group that we looked at, we asked them how often would they want to work from home. And only 3% chose never going forward. So that tells you that the majority do want to work from home at some point, but actually only 4% chose working from home full time. So at both ends of the scale, we're saying people will want to work from home some, but they won't only want to work from home. So there'll definitely be a grouping in a greater proportion of 1, 2, 3, 4 day working from home. Putting my actual percentage on it at this stage is difficult. I wouldn't like to say that, but all of that is positive for residential property, and it all fits with the point I was saying. The most secure, solid, stable investment, the one with any certainty you can have, is housing. We need a place to live, and they're going to become even more important going forward.
Thank you, Nick. So, and Nick, for you as well, you mentioned about the undervalue of sterling and what is likely to happen to sterling. Are further falls expected?
Well, yeah, so I mean, I would never want to sit here and say that sterling won't fall again. There's always potential twists and turns in the road that are unforeseen, that we hadn't appreciated. COVID-19 being a pretty good example at the first point. Now, the one thing to note is we are starting to see other parts of the world emerging from their particular share of the crisis, if that's the right term, emerging from their lockdown. And so we're getting a better idea of what the future might start to look like. So given all things being equal, we wouldn't expect any further major falls in sterling. But more importantly, the direction of travel is one of appreciation, value appreciation. And over the medium term, sterling is definitely fundamentally undervalued. So we would always stress to people to consider their investments in housing as a long-term investment. And over that period of time, we would definitely expect sterling to appreciate in value.
Thank you. And Rob, I think we have one purchaser is asking from the first release, when is the expected completion of Huntley Wharf? Any expected delay due to the COVID-19?
Yeah, good question. I mean, ultimately, no, it's a simple answer. Our anticipated completion dates for the 2 blocks that we have released for Baker's Yard, it's Q1, Q2 2022, and for Discovery House, it's Q3, Q4 2022, which is still in line with what we said. I mean, ultimately, we have continued to build on all of our developments throughout the UK's lockdown. And this is due to the fact of the significant undersupply in housing that we have in the UK right now. It was deemed by the government that we cannot just turn it off, or we cannot just stop development across the country, because otherwise we'll just get further behind on the supply that we need to deliver moving forward.
Okay, and what is the current occupancy rate and rental for 1 bed and 2 bedrooms surrounding this project? I think that one is for you, Rob.
I mean, in terms of, surrounding the area, I wouldn't be able to necessarily give you direct or concrete stats. But what I can tell you is about the developments that we've built and the successes of those. So Kennet Island, which is about 2 miles away from here, is about 1,700 homes, a mixed-use development of apartments and houses. And that is now fully sold and ultimately fully rented out. So, what we've seen from there is that there's been, significant demand for the area, both in terms of people looking to purchase their own home, but also then investors that have purchased there looking for the rental market as well. So, that has been, a great success. And ultimately, as far as I'm aware, everything has now sold there, and the rental demand for the areas stay very high. On top of that, we also have Green Park Village, which is about a mile further west from that development, which again consists of both houses and apartments. And that has been a huge success as well. And it's still ongoing in terms of the development that we're doing there, but we've completed about half of the scheme. And what we've seen there is that occupancy rates are near 100% as well. So there's definitely demand in the area. There is a huge amount of new build in Reading because it's quite an established market. And that's why something like Huntley Wharf, right in the centre of Reading itself, is quite a unique and great opportunity.
Thank you. And how has the price changed since the launch?
So far at Huntley Wharf, we still remained at the same level. As we said, we haven't really officially launched it to the market yet, how we would traditionally launch, and that will be coming in November this year. And so by that sort of stage, who knows where we'll be. But right now, the pricing is at the same sort of level.
Yeah. And has there been many international investors attracted to Huntley Wharf?
Yeah, absolutely. I mean, obviously, Reading, historically is a very popular local market, but due to the international exposure that it's had with these global companies going there, we have seen a more and more increase in international investment into the area, and we've seen that through those other developments that I spoke about as well over the years. So Huntley Wharf has been popular. It's been very popular here in Southeast Asia. I think, of course, the maple trees investment, I think, certainly gives people, in and around the region, the confidence in the area. And on top of that, we've had a number of people buy for different reasons. We had, one person bought because the child is going to be educated at Reading and they wanted a place, in central Reading. Another person was relocating to Reading for 5 years, but needed to be close to the station as she was going to have, a number of meetings in central London. And that's kind of the versatility that the development offers. Whether or not you're buying, for your own use and for your underlying own use, it ticks most of those boxes, but also from an investment point of view, a brand new development with the amenities that we have in central London, central Reading, is really second to none.
Okay, and there's a question for you, Nick. Is the master plan for Reading's development inclining towards more commercial development or residential development in the next 10 years?
Yeah, good question. I think the answer is a bit of both, actually. So there is a great proportion of residential because there's the fundamental acknowledgement that Reading town centre is undersupplied in terms of its residential offering. Typically, historically, Reading has been, like in a way, many of the regional key employment areas of the UK, at the centre of the heart of the city has been commercial almost entirely, and the residential has been on the edges of it. Now, there's more and more residential in the heart to reflect the fact that people do want to live and work in those key urban areas. So there is that definitely high proportion of residential, but there are some commercial elements to it as well, and an understanding of a need to modernise and reflect. If you have more people living in that central area, you'll need the commercial offering to support that. So a retail and a leisure offering as well.
Thank you. And Rob or Nick, both of you can answer these questions. Is UK still in lockdown? How about travel restrictions?
Yeah, I mean, Nick's probably in the best place. I mean, in terms of from us at Berkeley, ultimately, UK is kind of in a partial lockdown right now. So, workers are allowed back to work. So our marketing suites are open. So if you have anyone in the UK, or if you're based in the UK and you'd like to go down and see the development, and ultimately, take the walk from the development to the station or to the Oracle shopping mall, you can go down there and meet with one of our sales representatives that will be happy to take you through the development and through the show apartment, of course, adhering to safe distancing measures.
Okay.
Yeah, to add to Rob, so the UK is in a form of lockdown. I would probably answer it as gradually reducing some of the restrictions that have been in place. Travel, for example, so I live in London. I'm allowed now, in effect, to travel anywhere within England, but I can't go into Scotland or Wales or overseas unless there was a very significant reason for why I would be going, which I wouldn't know what that significant reason might look like. But things are gradually easing. We expect schools to potentially start opening from next month. Further wave of opening of different types of businesses, more customer-facing businesses from July. So by the summer, all things being equal, we would expect to be in a much more open and active economy again. That said, all of the indicators are being monitored closely. The government is watching to see that there is no increase again in the COVID rate. So that would be the only reason that it wouldn't open during that type of time frame that I've outlined.
Okay, thank you. And Nick, you mentioned about the tech companies located in the West UK, why they are there. And can you share a bit more on the potential employment for Reading? Do you know if there is going to be a surge of supply in housing for Reading, or is still considered an undersupply given the potential increase in employment around Reading?
So I suppose answering that question in reverse order, we definitely feel that Reading is an undersupplied housing market and will increasingly be so because of the employment profile that exists there. Now, why are those firms there in Reading? So, to be honest, the initial genus of that answer, I couldn't actually tell you. I don't know why the first tech firm went to Reading, but one of the good reasons is probably its geographical location that Rob outlined in his presentation. From Reading, you've got access to Heathrow, very close by, and also a much quicker immediate access to the arterial road networks that go north and south in the UK and east and west, and the rail networks as well. So you can kind of go anywhere very quickly. So these blue chip companies that arrived initially with the idea of servicing the UK as a whole as a market chose this as a very strategically good location. Now, why are there more and more tech companies coming? I think this comes back to something I was saying in my presentation. Many businesses, particularly tech businesses, have a hubbing mentality. They want to be near other tech businesses in order to grow better themselves, to find the supplier that helps them to do their business going forward. So the fact that they're there already and the fact that they're all kind of growing well together is only good signs for increased employment and indeed for Reading as a residential market as a whole.
Okay, we will answer the last few questions. And what is the payment terms of this development, Rob? And what is the expected rental returns? And what is the price of 1 bed and 2 bed again? I think you mentioned, but the customer, I think, is very interested in Huntley Wharf. So ask you the questions again.
No problem, no problem. In terms of the payment terms of the development, it's ultimately a £1,000 reservation fee once we've sort of agreed on a price, and that essentially takes the property off the market. And then over sort of a 21-day period, or after 21 days, and sort of reading through the contract, you'll pay a 10% deposit. And then in 6 months' time, you'll pay another 10% deposit. So essentially 20% down in 6 months. And then you won't pay anything until completion in 2022. In terms of the pricing, our 1-bedroom apartments start from 307,500. Our 2 bedrooms from 385,000, and for those others on the call, the 3 bedrooms start from 545,000. In terms of the rental yields, again, we're going to be looking significantly higher than sort of a central London location. You're going to be looking from around 4.5 to about 4.8% rental yield. And interestingly enough, you asked whether or not prices have been increased since we launched, which is a no, but our rental estimates have increased, and that's due to what we've seen in the local market since we first released this development. So, you know, we've seen those go up by about 0.2, 0.3%, which in terms of rental estimates is quite a lot in only a matter of months. So, yeah, the rental demand in the local area is currently very strong.
Thank you, Rob, and for all the clients. I hope we answered all your questions. If you have any further inquiries, you can always consult your respective sales consultants, and we are very happy to help. Thank you for your participation. Vidya, back to you.
Thank you so much. I don't know about the viewers, but I was so engaged and I just wanted it to go on and on and on. But alas, our time is now towards the end. Thank you once again to Nick and Rob for such an insightful and great presentation. Let me also remind you to the viewers, if you are interested to read about Western Corridor in a greater detail, we are just about to release a research paper very shortly, and it would you can either download it from our website, and I will also be sending a post-webinar emailer to each and every one of you, which will have that report as well. So with that, don't forget the local representative in your marketplace. If you are viewing from Singapore or Indonesia, you can contact me for any information you need about International Resi or Huntley Wharf itself. For Malaysian clients and Thai clients, you can also contact Ms. Christine Wong and Kuna Papat. Okay, so that's it for this evening. Thank you so much again for tuning in with us. We have been so proud to be able to present to you the series of webinar during this time. With that said, do take care, stay healthy. For those of you who are back gradually into the open, continue to maintain good health and hygiene. For the rest of us in Singapore, it's not too long. We will get through phase 1 together. With that, have a good evening.